Three important price levels of resistance on the S&P 500. This is technical analysis of the stock markets, update and forecast for the week of July 20th, 2020. Hello traders, I'm Richard Graham. Thanks for joining me. We're going to start by taking a look at the S&P 500. As we come into the trading week, we are hitting an area of price right around 32.32 that is considered a very important level for three important reasons. Three levels of price resistance. Remember, we had this island reversal pattern back around June 10th or so, where price gapped up on good news, but then shortly thereafter gapped down and sold off hard right around June 11th. Now, since then, we've retraced that entire move, and now we're inside of this bearish rising wedge pattern. Now, we got this level of resistance here. We've also got a level of resistance here on this trend line, where we've hit here and here and here. And we're also hitting a level of resistance on a longer term time frame. So if we take this all the way back, say we are still sitting underneath this channel here where we bounced off price at the bottom of this channel back on April 1st and again on May 14th, and then we bounced off this level of support again on June 12th. That's three times, and then on the fourth time we broke right through it, sold off, went back up, and we've been trying to get above this level, this red trend line you see here. We've been trying to get up above it. We bounced off it a couple of times, but we are still sitting below that upward sloping trend line. And so until we can get above that trend line, that's going to act as a level of resistance as well on the longer time frame. Now, on the shorter time frames that go back about a month or so, a little over a month, same thing, we're hitting resistance. So we've got resistance on the shorter time frames and the longer time frames. Now, what's important for us to realize is that we are still in an uptrend on the short time frames and the longer time frames. So the trend is your friend until it's not. But this could be an important level that we sell off from as well. In the coming week, it's possible we could start to see the S&P 500 sell off, and we're just going to have to watch it. See what happens when it comes down to, say, this level right around 31.37. This could act as an important level of support, and we could bounce off of it, come right back up here, and that would be a nice trade. What you want to do in a situation like that is, once price gets down to this level, if it does, go ahead and drill down to the 5-minute time frame and see if you can see some kind of reversal pattern that you can trade off of. What kind of reversal pattern will we be looking for? Possibly double bottom, higher highs and higher lows after seeing lower highs and lower lows on the way down. So look for a turnaround once we hit this level, this important level of support. Also, this area here right around 31.80 could act as an important level of support. So we could see price come down here, right around here. That's more of a short-term scenario, and then maybe we can see if we have a chance to get long right around there at that level as well. Where else are we seeing support? If we have a heavy sell-off, price could come all the way down to this lower yellow trend line, which would be right around 30.70 or so, and that would be another area that we could look for a turnaround in price, and possibly ride that all the way up to the top of this channel as well. Now, the other scenario is more of a bullish scenario where we break out early in the week from this level of 32.32 and we go higher from there. Now, in the daily chart, take a look at what could happen. If we break out of this area of important resistance, it's going to act as important support. Resistance becomes support. So then when price retraces back to this area, I would be looking for an area on the smaller time frame to get in for the reversal. So those are your two scenarios of your bearish and your bullish. Let's take a look at gold. Gold is looking great and has been for quite some time now. Now, there is the scenario that we are at the top of this channel, and even though we've broken out of it and price comes right back and slams back into this area of this upward sloping trend line, but however, we still are sitting above that upward sloping channel that we have broken out of. So look for gold to go possibly higher before it comes back and goes lower. If that happens, I would look for that area that it's currently at as a major area of support and possibly an area to get into. This is the GLD, so this is the ETF fund that trades gold. Very similar in price action to the actual gold futures. Silver, also looking great. We broke out of this important area of resistance that was back on February 24th, and we also broke out of this area of resistance on July 2nd, and we've been going up since then. Now, if you're looking to get into silver, you're kind of chasing price at this point, so you might want to wait until it comes back into this important level and then look for a possible reversal pattern on the smaller time frame for an opportunity to get long. But I wouldn't want to be short silver at this point because we're still in an uptrend. This is not financial advice or trading advice. This is just the way I trade. And of course, you have to use your own due diligence. The dollar has been in a downtrend for quite a while now, but we are hitting some major support, so look for a possible bounce. Also, we have support down here at this 95 level. That could also act as an area where we might get a bounce. The XLF is the financial sector, and we've broken out of this important level that I drew in here right around the 24 level. We broke out of there on Friday, so look for financials to possibly go higher from here. We just had an important week of reporting for the financials and the banks, and they seem to be holding up okay. TLT is the long-term government bond ETF fund, and that is looking bullish as well. We were in this triangle pattern, and now we're in this uptrend. I drew in this trend line, and the only thing I would say is that on the shorter time frame, we did break down below it, and now we're testing that area of resistance. However, we're still in this uptrend, and we are above this area. If you're looking to get long in government bonds, one thing you might want to consider is waiting for it to come back to support, which could happen any time now. This is the hourly chart. When support is sitting right here at 165. And if we take a measured move of how long price was in this triangle, a lot of times once price breaks out of a triangle, you'll have a similar measured move, price movement to the upside or the downside, which means it could go quite a while to the upside here before it turns around. Let's take a look at the VIX. The VIX is the fear index, and we're still heading down. And on the VIX term structure, we're still in contango, which is a bullish sign for the markets. Coming up this week, we've got earnings from some big companies: Tesla, Amazon, Microsoft, Intel, Verizon, AT&T. This is going to be interesting for the Nasdaq, which has been a leader of the market for the past 4 months, kind of seeing a breakdown a little bit on the short time frame. So if we, as long as we can stay above this upward sloping channel, which we've got a lot of room to play with, we should be okay. We got a lot of support here. And take a look at Tesla. Tesla's been on fire and looks like it's consolidating into this triangle pattern here. So look for a possible breakout to the upside of a measured move about this size, or possibly all the way back down to support. I expect a lot of volatility coming up in Tesla. We've also got some support here, so if you're looking for an opportunity to get long, maybe this level right around 1385 would be somewhere to drill down to the short time frame when you see that price and see if you see a reversal to the upside at that point. Taking a look at the economic calendar, Wednesday we have existing home sales and crude oil inventories. And then Thursday is probably the big number we want to look for in trading: initial jobless claims, which have been better than expected recently and have been improving. All right, traders, if you like these kind of videos, do me a favor and hit the like button, the thumbs up. It really does help support the channel. And if you haven't already subscribed, please consider subscribing. That way you'll get a notification every time one of these videos is released. All right, good luck this week. Have a good one, and we'll see you next time.